What's going on, guys? My name is Richard Moglen, and welcome back to your stock market outlook video sponsored by MarketSmith. As always, we'll run through the market indexes, leading stocks, and stocks I'm watching pretty closely. They'll move on to a few different sources of sentiment, the IBD big picture article, and finally the wishing wealth GMS signal. And at the very end of the video, I'll give you my take on the overall health and breadth of the market. Now, last week, we definitely had some positive action, fishing right at the highs for the week, taking out the prior week's highs as well. And even better than just the overall indexes acting well and finishing strong on the week, we saw multiple names kind of continue to set up. And many of the names I highlighted last week, such as LTHM, semiconductor names, shippers, continue to progress, as well as the oil and gas names, which have been leading. And we'll kind of touch back on and look at those charts later on in this video. Now, looking at the weekly chart in particular, there was definitely a negative with last week's action. First of all, we were oversold on this index, so we were expecting some type of bounce, some type of rally based on the indicators I mentioned in last week's video. You can go ahead and click the link in the description, or it should be popping up right now, and I'll bring you right to that point in the video. And despite the strong action last week from the indexes as well as improvement in the individual names, you can see that volume was lower on this index, which is a slight negative. And definitely you want to see signs of accumulation come in on the weekly chart if we are going to see a durable rally that you can trade. Otherwise, this could just be a kind of bear market rally, which could be very short-lived. So stay nimble. Don't just dive in all at once. Practice progressive exposure, and most importantly, manage risk along the way. And before we get any further into the video, I do want to announce that we're running a Memorial Day sale over at TraderLine for both annual private access, which is our mentorship program, where Ray and Ross really walk through their processes, teach you everything they know. We've got proprietary resources for you guys, videos, webinars. We've got exclusive forums where you can interact with other students, collaborate on studies, routines, all of that. And if you really want to level up your trading, this is the community to join. I highly recommend it. So if you're interested in that, go ahead and click the link down below in the description. And in addition to annual private access, we're also offering $300 off the Oliver Kell Swing Trading Masterclass, which is an extremely valuable resource. This was the project I was most proud of coming out of last year, and I think it can help you improve in every single market cycle. Basically, Oliver Kell, who is the US investing champion of 2020, walks through his entire process thoroughly from start to finish, talking about his scans, his routines, buy rules, sell rules, how he narrows his focus into the leaders. And basically, he left no stone unturned and does a great job with examples, basically teaching you how he interprets the market and focuses on those best opportunities. So I highly recommend this resource as well. It's basically over 18 hours of video. We went above and beyond to really deliver an amazing resource and course. So definitely check that out if you want to level up your trading. Once again, the link will be down below in the description and popping up right now. So with that said, definitely take advantage of those deals if you want to. And let's dive right back in with the market indexes. So getting back to the Nasdaq Composite, let's now move on over to a daily chart. And you can see the strong action late last week, breaking through this resistance level, as well as the declining 21 EMA here. Again, back above that 12,000 level as well. We still have a declining 50 SMA to deal with, as well as this overhead supply here. So those will be key levels I'll be watching very closely. But it's constructive action. The main kind of drawback here, as I mentioned previously, is the low volume here. We did get a fall through day, but I would like to see more volume come in, as well as leadership groups continue to develop and improve as a whole. In my mind, we're still not out of the woods yet. Maybe we've got a tradable rally. I know a lot of people have taken advantage of this nice action. There has been opportunities here, but until we get back above a rising 50 SMA, I'll still be cautious and just managing my risk that much tighter. So that is the Nasdaq Composite. Moving on, let's talk about the S&P 500. Looks pretty similar, very strong action, breaking above this level, as well as the declining 21 EMA. But we're right back above, or right back against this potential line of resistance right here, near that 42,000 level, so, or 4,200 level. So a lot of work to do. I'd love to see constructive action where we go sideways, pull back, see a decline in volume here, and then see a confirmation upside with ideally volume being above average, and just seeing overall accumulation and development of leadership groups. That really would be extremely constructive, and getting back above that 50 SMA and ideally eventually that 200 SMA on this index. But overall, don't expect this just to rip back to all-time highs. There's going to be some work to do. Likely there'll be further drawdowns, but just be ready, manage risk along the way. And that's the best way to go. Next up, let's take a look at the Russell 2000, the IWM, and this, as I mentioned last week, was kind of outperforming the S&P 500 as well as the NASDAQ because we did have that higher low versus the NASDAQ and S&P, which kind of undercut this prior level here in that place in time. But we saw constructive action here, a nice close on this day, and then 3 very strong days breaking above this point as well as the declining 21 EMA. But like the S&P 500, we're running right into resistance, and we'll also have to wait and see how this acts versus the declining 50 SMA. So still a lot of work to do for this to really be back in a confirmed and strong uptrend, but constructive action overall. And like the S&P 500, I'd love to see some quiet days, maybe some inside days, and then reconfirmation to the upside, really showing that institutions are back to accumulating stock. Moving on, let's take a look at the IWO specifically, which is the Russell 2000 Growth Index, and looks very similar to the IWM. Once again, we've got that higher low here, strong action, but we're up against this resistance level as well as the declining 50 SMA if it does continue to move up. So we'll have to see whether this can build and get back above that key moving average, which would signal more of a confirmed uptrend at that time. So that is the IWO. And lastly, we've got the FFTY, the Innovator IB50 ETF, strong action once again. And we do have some work to do to get back to that 50 SMA. And once again, a lot of overhead supply throughout this downtrend, and we are below declining 200 SMA. So we'll just have to see whether this is a tradable rally or the start of something even bigger. But manage risk, practice progressive exposure, and that's the best way to go about it. And if you're curious about what progressive exposure is, it's basically building on success and not being too exposed in the market until you've got some profits behind you. And there's an entire video from Mark Minervini on my channel, which will be linked down below in the description, as well as popping up right now, explaining that concept and why it's so important to achieving outstanding returns. So with that, let's move on into some individual names that I'm watching, and let's start with those big fake names, which can have such a large impact on the overall index. So starting with Tesla here, we've got a sharp rally, V-shaped rally here, back into a declining 21 EMA, so a level of interest here. And this also lines up with significant prior resistance / support. So we've got some work to do before this kind of resumes an uptrend. And it looks like the 50 SMA and 200 SMA are just barely sloping down here. So we still have a lot of work to do before this really resumes that uptrend. And right now, this just looks like a larger base that's building, and who knows how long this will last. Moving on to Apple, which has really held up the best of these larger caps. We are right at this key level, as well as right near the 21 EMA and right near kind of these prior significant levels. So we have a lot of work to do to really get back into that uptrend. And I'd love to see us get back above that 21 EMA, have that kind of build up under price, and to see us back above that 50 SMA as well. But still a lot of time needed, I think, to heal this chart before it really sets up once again. Moving on, let's take a look at Facebook, or Meta, whatever you want to call it. I think I'm going to call it Facebook, even though it's now Meta Platforms. This does not look like a nice chart. This is a stage 4 downtrend, really below all the key moving averages. And you see these huge gap downs. We are potentially forming kind of an inverse head and shoulders, but I could easily see this kind of breaking down below these lows and just continuing down well below that 200 level. So yeah, a lot of chart healing needed here and a lot of time as well. Moving on to Netflix, this looks pretty similar, if not worse. We've got 2 gap downs here on large volume, and basically it has to get back above the moving averages for me to even consider trading this name. Let's move on to Google. This also looks pretty bad, although not quite as bad as Netflix and Facebook. And you can see we're below all the moving averages. And also, this is going to be a very significant level right near 2,500 here. Moving on to NVIDIA, I kind of treat this as a FANG type name as well. The semiconductors definitely showed some relative strength, more so in the smaller caps like ON, GFS late last week. But it's good to see NVIDIA kind of participating at least. And we got back above this point as well as the declining 21 EMA. But we still have that 50 SMA and 200 SMA above price to deal with, as well as kind of significant resistance levels right at these levels. And we've got that key 200 level to deal with. So right now there's just a rally within the context of a downtrend. So try to be objective, even if you love these names fundamentally. If the stock's in a downtrend, it's more likely to continue that than not. So it really has to change character and start building some higher lows and get back above those moving averages to really restart a strong uptrend. So that is NVIDIA. And now let's move on and kind of check in with some names I mentioned last week, starting with LTHM. This is one of the strongest stocks, or actually strongest charts in the market here that's non kind of oil and gas related. looks pretty strong. The kind of great pivot point was right through this area, and then we had the breakout from the base on this Friday. As you can see, it was showing clear relative strength before this breakout as it formed higher lows as the market was forming lower lows, and we saw that relative strength line just kind of shooting up even before it had this rapid increase on Thursday and Friday. Moving on, we've also got SQM here. There's another name I mentioned. Very strong action, definitely was short-term extended, but continues to outperform here. Great numbers, great estimates for this year, and very strong price and volume action, relative strength rating of a 98. Moving on to some oil and gas names, these continue to really shape up and be the strongest charts in the market. They're often above their rising 200 SMAs. EQT had a nice breakout from a volatility contraction, pivot right in this area. You've also got this kind of secondary pivot, which I had a nice retest of on this day after breaking through it, and just a strong end to the week. And we'll have to see how it progresses from this point and deals with that key kind of 50 level. I love to see kind of some basing action for a few days and then reconfirmation to the upside on high volume. We didn't see huge volume on the breakout, so I definitely want to see that come in to show that institutions are accumulating. But overall, very strong estimates here from this name and some decent numbers overall with EQT. Moving on to CVX, which is kind of one of the bigger caps within the oil and gas sector and industry. You can see that this also broke out, but not on huge volume. So definitely a little bit of a caution sign for me. I want to see a breakout on huge volume, suggesting that institutions are behind it. So I wouldn't be surprised to see kind of a quick pullback below this line, and we'll see how it acts versus that prior pivot. And if it can build, then it could be very constructive. But I definitely want to see that volume come in eventually, suggesting that it's not just retail behind it, but also institutions. Moving on, let's take a look at Oxy. A lot of people are interested in this name as well. We've got nice action here, nice breakout as well. But once again, not huge volume on this breakout. So I definitely want to see both strong price and volume action coming into this name. Moving on to some shippers, let's take a look at Zim. Progressing up the right-hand side, you had a little bit of a pivot right here, and it's also kind of setting up into next week. I'd love to see maybe an inside day right here, and then you can use this high as that pivot, and ideally we get a breakout on volume. This is a very strong stock, great numbers here, and very strong estimates, and a super strong dividend as well, which is pretty interesting. So this is a name that has a lot going for it and has been continuing to show kind of relative strength throughout this bear market. Also moving on to some chemical names, OLN has definitely been showing a lot of relative strength. ALB as well. This group overall has been definitely outperforming. You can see it's progressing nicely through this overall resistance level, strong action Thursday and Friday, and we'll just have to see whether this can kind of build, go sideways and tight on declining volume, then reconfirm on higher volume. I like these price and volume characteristics a lot more than the oil names, where we've got a move up on high volume. And for the most part, when it's going sideways and consolidating, you've got lower than average volume. So keep an eye on these. This is a group that's definitely moved up and improved over the past few weeks. So there could be potential opportunities in these names going forward as well. Moving on to some semiconductors, we've got GFS, which acted strong and was forming that higher low setup and really acted nicely last week into that kind of 60 level. We'll see how it acts versus that. A little bit of overhead supply up here, but overall has been outperforming over the past few weeks, as you can see from that RS line. ON, another name, acting nicely in this group. And in general, this kind of group is coming off the bottom, but showing a little bit of accumulation. So overall, those are pretty much the charts that I want to cover in today's video. Overall, in terms of groups, we've got those chemicals working. We've got shippers, semiconductors off the bottom. We've got oil and gas continuing to outperform. And overall, just keep an eye out for those groups that continue to develop and show relative strength as a whole as we progress through this rally. So overall, that's pretty much it for the chart section of today's video. I apologize if it's a little bit shorter than usual. If you can't tell from my voice, I'm feeling a little bit under the weather here. But let me know any stocks that you're watching in particular down below in the comment section. I'd love to see those names, and I'll try to give my feedback on as many as I can. And with that said, let's now move on to sentiment. All right, so starting with my Twitter surveys, we saw a big jump in bullishness from 39.4% to now 51.5%. That's definitely a big jump and a little bit surprising, although we did have a strong end to last week. But I think people do have to remember that even though we did get some strong action, leadership still has a ways to go, and we are below a declining 50 and 200 SMA on many of the charts out there. So kind of stay aware of that the overall trend in many stocks is still down, and we'll basically have to continue to see how stocks develop from this point. Moving on to the name exposure index, let's take a look here. We saw a slight increase from 19.51 to now 33.19. Still very low here, so that's good from a contrarian point of view. And moving on to the bulls versus bears poll, we see that the bears are still well above the bulls here, although we saw a slight decline here. Once again, this shows that there is fear coming into the market. Lastly, we've got the put call ratio, and it's still just kind of in this box area above 0.8, although it did decline into the end of the week. And I'd love to see a flush above these highs and into that 1.15 level. That would maybe kind of occur on a final flush down if we do get something like that. But that would just kind of signal a little bit of capitulation, which we haven't quite seen just yet, even though we have seen a pretty significant decline. So overall, sentiment is still pretty low, but could go lower. And once again, the action of the indexes, leading stocks themselves, that's the most important thing. All these indicators are pretty much secondary in my analysis. With that said, let's move on to the IBD big picture article, and the headline is stock market ends week with a flourish, but note this fall inflation data lifts all boats. Overall, discuss the strong action, although the lower volume here, how the kind of small caps are acting a little bit stronger than the larger caps, and how they would like to see more volume coming in on these indexes. Overall, their take is back to a confirmed uptrend because we did have that fall through day. I think it's still yet to be determined whether this is just a bear market rally or the start of a new confirmed uptrend, but we'll have to see how that leadership and individual stocks progress from this point. Lastly, we've got the wishing well GMI signal, which is still currently red since April 12th. And we've got a GMI score of 106 on last Thursday. But we do see some new highs continue to kind of trend a little bit higher. And Dr. Rich kind of walked through how he uses this data to judge market conditions. Definitely a very interesting read. So I highly recommend you check out this article. So with all that said, my current view on the markets is basically an unconfirmed uptrend. I think there's definitely a potential tradable rally. We've seen that the past few days. Definitely if you're more kind of short term and are a quicker trader, you can take advantage of kind of these moves. We're seeing more individual names kind of set up, even break out of bases, but a lot of charts remain under those key moving averages. And we've yet to see a significant trend change where they get back above that 21 EMA, 50 SMA, and 200 SMA. So it remains to be seen what's going to happen, but we just have to kind of take it day by day and manage risk along the way. So with that said, I hope you guys enjoy this video. Remember to leave a like down below and subscribe if you're new to the channel. And definitely, if you are interested, check out the Memorial Day sale over at Traderline for the Swing Trading Masterclass, as well as the annual private access. This is a great way to improve your routines, consistency, performance, and a great way to set yourself up for success come the next significant bull market. So with that, thanks again for watching, and I'll see you guys in future videos. Thanks.